With another year in the books, it's a great time to review how the current economic trends could affect your investments and financial strategies. Hi, I'm Mendoza, financial advisor at Mendoza Private Wealth. 2024 was another strong year for U.S. markets. Let's break down the key market trends and what lies ahead. As you can see on this chart, the S&P 500, represented by the purple line, put up a pretty impressive 25% performance last year. On a standalone basis, that would be impressive, but when it comes on the heels of another great year in 2023, well, the last 2 years, the average is about 26%. What's the long-term average? 11. Well, hopefully that gets your attention. Could we continue this? Is this sustainable? Or is 2025 going to prove to be a bit more challenging? Well, there's no question that the enthusiasm around artificial intelligence and perhaps the expectation of further rate cuts from the Fed has led to the market being where it is today. But certainly the risks are out there, and geopolitics is one of them. Recently, Canada's Prime Minister Trudeau announcing his resignation, leadership changes across Europe. This is all adding to global uncertainty. Domestically, we have our own uncertainty to deal with regard to new presidency, tax policy, tariffs, unemployment, immigration. Remains to be seen what the net effect of those policies will be. But thankfully, as you can see on this next chart, inflation, as represented by the red line, has largely been brought under control. And this is thanks to the Fed's pretty swift action in increasing interest rates during that time in 2022, when unfortunately the S&P 500 was actually down 18% that year, as you might recall. But the hard work of increasing interest rates to combat inflation seems to have paid off. As you can see, inflation is essentially tapered out around the mid 2% range, pretty close to the Fed's target, perhaps a little bit stubborn here in the mid 2s. They like it to come down to closer to 2%. But most recently, the Fed has seen it appropriate to start the cutting rates. And last year, we got 3 rate cuts, 50 basis points, and then 25. Of course, the question is now, where do we go from here? What's the outlook? Well, I would call it moderate optimism, perhaps coupled with some uncertainty. Again, we're not sure what the new presidential administration's policies will actually result in. There is some concern around the inflationary effects of tariffs, although those are likely to be one-off temporary effects. They're all done at once, at least. And if it's gradual and if it's kind of painfully slow, it might lead to higher market uncertainty. But the question I would ask is, after 2 strong years, is it time to perhaps consider de-risking your portfolio? If nothing else, perhaps taking a little bit of gains off the table and maybe trimming some of those large concentrated positions that have inevitably ballooned in the portfolio, particularly if you were invested in the Magnificent Seven, or big tech, shall we say. As always, time in the market beats trying to time the market. And at times like these, staying diversified and regularly rebalancing your portfolio is critical. Long-term financial planning remains the key to weathering market unpredictability while pursuing your most important financial goals. If these market shifts have you questioning your financial strategy, now is the perfect time for a review. Reach out, let's navigate the future together. Thanks for watching.